everyone, I'm Jane Hanlon from AdviseWise Mortgage Club and the manager there. Welcome to today's Ask Jane. Joining me today is Matt Latham from Just Retirement Specialist Account Director. Today's question: what is the rationale behind Just Retirement offering a medical underwrite lifetime mortgage? Over to you, Matt.
Hi, Jane. Thank you very much for inviting me on today. I suppose ultimately the main point of using medical underwriting for lifetime mortgages is, and it uses our IP and certainly our experience from the last couple of decades, is you have people who have birth ages, and the birth age, your normal natural age, will give you an idea of the loan to value that you have for lifetime mortgages. However, for some people who have some medical conditions, maybe even serious medical conditions, their birth age isn't necessarily their medical age. Their medical age might shorten their life expectancy, and so therefore their birth age won't really reflect their medical age. So we employ medical underwriting to enable some people with medical conditions to have a medical age which is slightly older or older, and that in turn will mean that you should be able to have enhanced loan to values. So, I mean, that for us is the main real benefit of medical underwriting for certainly our product.
So do you think that more would actually qualify than that the advisors recommend to this product?
Absolutely, yeah. I think that, I mean, if you look back at some of the stats on medical underwriting, then there are 14 million people in the UK with high blood pressure. That is a factor that would influence on medical underwriting. You have 1 in 2 people, unfortunately, will suffer from cancer at some point in their lives. There are 5 million, nearly 5 million people with diabetes within the UK as well. Now, all of these are factors that could influence how much you can borrow, and certainly medical underwriting. So it is really, really important that we investigate our true customers' circumstances to be able to offer them the deals that they might find appropriate. If you don't find that information out, then of course we can't employ medical underwriting, and your clients might not be able to obtain or attain the best loan to values that they might need.
So you ask about 27 questions with including weight, height, smoking and alcohol. Any reason for those particular questions?
Yeah, I mean, I suppose ultimately we've been underwriting in the medical space and certainly in the retirement space for a number of years. And there are hundreds and hundreds of different conditions that we can underwrite on. So we've had to try and condense as many conditions into as few questions as possible. And what we've done is we've got a question set now that asks a few questions that gives you the broadest reach of qualification for your customers. So I appreciate there are 27 questions. That might seem a lot, but there are hundreds more conditions that we could ask questions on. But we've tried to go for I suppose, the best fit. So the most qualifications with the fewest questions, if that makes sense.
So how is it actually assessed? Is it medical underwriters?
Yeah, well, we do have medical underwriters. We still have, it's very old fashioned, but we still have medical underwriters that can underwrite cases. But actually, to be fair, for most of our lifetime mortgages, we do have a system that can provide an immediate response and give you a good indication. So we've got a calculator on our website that will enable you to find out what loan to values are appropriate. To get a binding KFI from us, though, we would need to assess that, but you can get that done through our automated underwriting process internally, so it shouldn't take too long, and in the vast majority of cases won't need to see a medical underwriter, if at all. Right.
So if you're offering high loan to values, do you charge extra on the rate, and why?
Yeah, there is. It will be called our J5 product. So we have 5 products ranging from J1 through to J5. J5 is our medically enhanced product, and yes, it does have a higher rate than maybe some of our other products. The reason for that is, of course, is an enhanced loan to value is going to be a financial risk for any provider. Now, the thing with medical underwriting is it provides you a life expectancy. Now, a life expectancy is not a rule. If we think that someone has a life expectancy 2 years shorter on average than someone who hasn't got a medical condition, then that actually doesn't mean that they will live 2 years shorter. It's just an average. And actually, what we're doing is we're taking that risk away from certain people, and we're saying, okay, well, look, we will say that your life expectancy is shorter, but it might not be. The definition of life expectancy is the point at which 50% of the cohort have passed away. So by definition, most people will either die before or after their life expectancy. So that's why it's not an exact science, and we do need to price that for a risk for ourselves accordingly.
Do you offer any cashbacks on these products as well on the J5?
Yeah, we do. We have a number of cashback options available for clients. Cashbacks are very, very useful actually, and can enable people to actually either borrow additional sums as well on top. But of course, cashbacks aren't included as far as any repayment numbers are concerned. So actually, they can be a really economical way. So for instance, if you wanted to borrow £100,000 and there was a 2% cashback on any of the deals, then actually you wouldn't, and you wanted 100,000, you wouldn't necessarily need to borrow 100,000. You could borrow just over 98,000, and the 2% cashback would actually give you your overall 100% gross lending. But of course, all the interest rate would be applicable to the amount that you initially borrowed, which would be less than 100,000. I hope that makes sense.
Yes, no, that's a good point, to be honest with you, and one to be checked with the advisors when they're advising on these products, looking at the total overall really figure.
Yeah.
The other question I've got is, you've got the feature if one dies or goes into long-term care, the debt can be repaid without penalty within 3 years.
Yeah.
I mean, I feel that's a particularly useful feature with this product on the J5 in particular.
Yeah, I mean, you could easily argue actually that people who have medical conditions that we are aware of are more likely to be able to need to use that kind of facility. We as a company, we're very, very keen on making sure that people who are in vulnerable circumstances aren't pressurized or forced to make decisions either too quickly or that might put them in a financial loss. So we've built into all of our products, not just our medical product, but I think you're right to highlight that specifically for now, because I personally, I think that some people with medical conditions might be more likely to actually need to use that facility. So we're not going to put any pressure on people to make immediate decisions upon death or for someone to move into care. We're going to give them a good enough time to evaluate their circumstances. And actually, if they want to repay within the 3 years without penalty, then certainly that is applicable for them.
Your scheme also allows for regular payments or ad hoc payments, is that not correct?
That is correct. All of our products within our product range will allow either interest servicing or will allow a certain percentage, 10% free ERC repayments every year. Now, the interest servicing is quite an important one. We find most of our medical underwriting is used for lump sum lending, and it's generally for those people who are trying to maximize the LTV available. So it's not necessarily a drawdown product. It's normally those who really need to borrow the most that they can. What we find in that regard is that actually the interest servicing options is a really, really good way of managing someone's overall debt as they go through the loan period. What we also offer on any of the interest servicing payments is there is a rate reduction at various different levels depending on how much you repay. So that is another way that you can reduce the overall cost of borrowing. So whilst we mentioned earlier that there might be an incremental charge or a cost to the consumer for using medical underwriting, interest servicing can actually reduce that cost as well.
That's particularly useful, isn't it, if you've got a joint application where the youngest one has a medical condition but there's risk for the older one.
Absolutely. I mean, in most joint life cases where there's a joint life product, then the youngest life is the important life as far as loan to value establishment is concerned. Medical underwriting can be used on both lives, and that is a very, very good point for you to bring up, Jane. So thank you very much. And actually, I think that probably does prove another point. Medical underwriting can be a little bit not confusing, but it's another step on from lifetime mortgages. Now, I know with your experience, Jane, I mean, that's one of the biggest benefits of using someone with your experience or the mortgage club is that you can help them and guide them through. So if anyone has any questions, then you're definitely the right person to come to. I'm more than happy to help out, as you well know anyway. but there are always ways that we can guide you through how best to utilize medical underwriting.
So we do actually get cases where people are poorly and are under the retirement age and have to give up work, and then they've got a limited income. So something like this is particularly useful for them. And I do wish the advisors would ask more questions and consider this in more detail, to be honest with you. I think the report from the Equity Release Council will help with that now, as people will focus in a bit more on the advice and recommendation given to make sure it's adequate both now and in the future.
Well, if you want to look at the FCA, I mean, what you've seen certainly in their treating customers fairly rules and the outcomes that they have, treating customers fairly outcome 4 states that you should know the customer's personal situation. And we do feel at Just that actually health is quite an important part of that. So I think you're absolutely right. Health should form part of any recommendation or any advice process.
So I also think that the having the higher loan to value and people coming off interest only mortgages, if they can switch to something like your J5, will allow them peace of mind, especially if they can make the payments. It's easy, you said it's easy to get a quote. You go online.
It's online to use the calculator. Unfortunately, we don't have an online portal. All I'm going to say on that at this moment in time is watch this space.
Good. Do you require doctor's confirmation before you offer on any of these J5 cases?
We will always require the doctor to confirm the medical conditions. Obviously, at the end of the day, we are offering an enhanced loan to value potentially for consumers. We would like to prove that prior to completion before we release the money. So yes, we would need that doctor's confirmation to start with.
So have you got any examples of the difference of normal borrowing to this J5 enhanced borrowing on medical?
Spot on. A great point. Is all fair enough us talking about it, but what actually does that really mean to your customers? So let me just show you an example that we have here. So hopefully you will see this example. Has that come up on your screen, Jane?
Yes.
Perfect. So in this example, we have a 65-year-old who has a property value of 300,000. If you're using our normal loan to value scheme, then without medical underwriting, the maximum we would normally be able to offer as an LTV is 37.6%, which would give you a loan of £112,800. And you can see at the very bottom, actually, you should see the sort of the medical profile of this client. So they are overweight, they are a smoker, they've got high blood pressure with a heart attack and diabetes. So it is a fairly severe case. It's certainly not an uncommon case, but it is more at the higher end of our underwriting team. And so that underwriting itself, when we apply it to our J products, will give you an enhanced loan to value of 40.5%, which does give you nearly £10,000 additional borrowing on that £300,000 property. Now, I don't want to complicate things with cashbacks, but of course, the cashbacks, again, do offer you more choices depending on the circumstance. And that's, again, just going back to the benefit of AdviceWise and your own experience, Jane, is that's where you can help people and guide people if they are trying to use medical underwriting to enhance someone's loan to value.
Good. So certainly I've learned a lot, and there is limited lenders in this market, but I think there will be a high demand going forward. So I thank you for your time, Matt. I've certainly learned a lot. I hope our members have too. We welcome your questions in the future. Please submit through advisewise.com or on our Upskill page, or simply give us a call. Thank you for your time, and hopefully you will enjoy using AdviceWise Mortgage Platform and Club in the future.